Hey, what's up, you guys? I'm going to show you here how I took this IWM trade. So let me just show you quick. I took this trade at 6:40 in the morning on Friday, July 24th, and I sold it at 6:53. Now, I bought 100 contracts at $44 a contract, and then I sold them at 55. So about a 13-minute trade. I'm going to show you exactly how I picked up on this trade. So the first thing I'm going to show you as I come in here is you see this white dotted line. I've dotted this out for you just so you can see. Now, one of the things that you're going to see is I have what's called an S zone, meaning a support zone, and then plus a falling window. So what does that mean to me? Well, that means if price stays above it, it's going to go higher. If price gets below it, it's going to go lower. Okay. And then I have a checkpoint. Now, this is not necessarily an institutional zone by itself, but it's a checkpoint. Okay. Where it's coming in here to just position itself, liquidity, liquidity, liquidity. And you'll see exactly where this comes from in a moment. I'm going to show you this for a second. Okay. Now, yesterday at 6:40, I get into the position right here. And this was done during live trading. And I get into the position here. I hold it for a moment. And then eventually it flushes. And where does it go? It goes right to my checkpoint. Okay. So you would have got out right here. And this is a mistake people make all the time. They don't recognize where zones are for the institutions to get in and out, and they don't recognize where the actual checkpoint is. And so what they think is, okay, well, I'm just going to go from here to here, or I'm going to go from here all the way to here. And they miss out on the actual profits to do that. So what I did was I entered the trade right here at 6:40. I entered it right here. It was actually a really good entry because I got in on a green candle and then I just waited and then I came right back up. Now, if I would have been wrong, I would have actually let the trade come up here and exit my position, but that didn't. You'll notice that I actually have my red zone right here, which is my risk. That's what I was willing to risk. This is what I was willing to make a reward. So you'll notice if I were to put $1 in, I'm making 4 times, right? To let it go from this area. Now this would have come down right here. I would have stayed there. So that's a 1 to 2. So I basically was willing to trade off $1 to make 2. And if you just go back to my actual area, you'll notice that's exactly what I did, right? More or less. And so you take it from here. Now, where does this blue line come from? Okay, that comes from the 1 hour. All right. And you'll notice what they keep doing every single time on this area. All right. It just keeps bouncing and bouncing and bouncing and bouncing and bouncing. You walk all the way to the left, bouncing, bouncing, keep walking. And lo and behold, you find out where the actual liquidity pocket is. Happens to be right in this area right here. And this was a rising window that it's been using the entire time. And this is why I tell people all the time, okay, this is what it was using. Now, the window was already closed. Okay, this is where people make a huge mistake. They either leave windows open or prematurely close them, or they shrink them. And that's not how that works. You have to understand how windows work. So the window got closed already. So that's why I didn't have this. I just had a line. And so now I'm watching the reaction. Look what it does every single time, right? Now, I'm going to take you real quick to the higher level. And you'll see, remember I told you earlier, if it stays above, that's why I call it S zone, because look what happens in this area. Every single time that price has got up to this area, what do? They get up about it and they pump it. They get below it and they dump it. They get above it and they pump it, right? And then they just keep doing this over and over and over. So I said, okay, if we can stay underneath it, there's your falling window. Okay, that was the imbalance created by the market. So that's what gave the setup away. And this is the part that you have to be able to do way before the market opens. If you don't know where the institutional areas are, if you don't know where the market is in relation to its actual reaction, then you're making a huge mistake. If you're just drawing a bunch of lines, then you're making a mistake because what you're expecting is you're expecting the market to react here and do what you think, such a bounce. That's not how institutions enter into their area. That's not how they enter with their money. They do not just get into a checkpoint. The checkpoint is just drawing liquidity. It's trying to get you to do something, react. And this is where a lot of retail traders get stuck. So that's how I took that trade. I wanted to recap this, give you an idea of where this came from, and understanding how important it is to be able to draw and chart your levels out and then execute properly on your trade. So if you have any questions, feel free to reach out to me. I'm happy to help you. Take care.